an alumni of IIM Bangalore and served in MNCs like Hughes, NIT, and education startups like iDiscoverI. Now I welcome our distinguished speakers of the session, Mr. Naveen Jha, CEO, Deshpande Foundation and Managing Trustee, Deshpande Education Trust and President-TiE-Hubli. Now I welcome Mr. Melwin Braggs, Business Lead, Develop Schools. I extend a warm welcome to Ms. Seema Jhingan, Partner, LexCounsel Law Offices, New Delhi. I would like to hand over the session to Mr. Ujjawal Singh.
Thanks, Pragya. Welcome for most of you. I always thought, this is the second time I'm doing this and in the same room, but last time we had around 35, 40 people. I always thought money matters and people are more interested to know how to get money or how to spend money, but not in schools. Okay. Yeah, my personal experience is not much. I've just visited around 10,000 schools. I've trained around 50,000 teachers. And I will say that, yes, it matters to everybody. But we are looking at new financing models. And we are looking at how can we ensure that education becomes sustainable. We as a group, bring a varied experience from K-12 to higher education, from the law side to developing schools, and we'll try our best to provide you some new information which we think is very interesting in the education arena as of now. My personal introduction is that what Pragya said, plus I'm now on the other side of the table. I'm largely on the private equity, which evaluates around 100-odd companies in every quarter. Indus Balaji is rated as #1 private equity firm this year, as of now, because we have done 5 transactions, 5 investments in last 12 months. So if you see PricewaterhouseCoopers report, we are rated as #1 private equity firm for the year 2012-13. We largely invest in startups, incubations, and mostly in education. I'll ask the team to do a brief introduction once more of the little work which they do. Then we have 2 presentations, a presentation from Melwin and Seema. After Melwin's presentation, I'll request Naveen to share his view on higher education and a little bit on supplementary education. And then Seema can share about law and legalities within education. So maybe Melvin, a brief introduction, and then for all 3 of us, and then you can start the presentation. Yeah.
For the presentation, we can request the lady to be first.
She wanted to be last.
Okay. No, for the introduction.
Okay.
Good afternoon, everybody. I'm Seema. I'm a lawyer, and I'm a partner with a Delhi-based firm called LexCounsel. So I have around 19 years of experience in mergers and acquisitions, private equity, and VC funding. I do a lot of work in telecommunication. And for the last 10 years, I've done a substantial amount of work, investment and divestment and advisory work in education sector. So I'm hoping I'll be able to give you some value in terms of the legal scenario and the legal in the education system. Thank you.
Hi, my name is Melvin. I basically have cross-industry experience, been through exhibitions, trade fairs, so something happening here is pretty familiar to me. Been through infrastructure. I'm a telecom startup in the country. Spent some time with finance before I got involved with education. I coined myself as a startup setup specialist, specifically involved with starting and setting up of projects. In the discussion today, I tried to bring in a little more interest and say that there is money to be made in K-12 education. Maybe the structure is a little different, but yes, there is money to be made. So that's the point of view that I bring in.
Good afternoon, everybody. Naveen Jha, I head the Deshpande Foundation in India, and some way advisory role involved in Deshpande Foundation, US and Canada. So we have 3 places presence. In India, we have supported more than 200 organizations in for-profit, non-profit, and some are, they change sometimes for-profit, non-profit, those kind of organizations. Pretty much 20 plus exposure in education sector, so I'll be pretty much sharing our experience and what we think that where the investment in a larger interest of the country, it makes sense.
I start my presentation with this terminology that I've coined as 11,34,000 minutes of earning potential. 11,34,000 minutes is the time a student spends with education in India from kindergarten to graduation. I'm here to talk about building education finance system in India. Whenever we talk about building any kind of a system, it's very important to understand the components that go into the system. So we'll visit some of the components one by one, starting with the potential. India, in terms of a market, has more than 550 million people under the age bracket of 25. That's the potential market for education in India. If we take the entire population of India, which is 1.24 billion people, more than 32% of our population is below the age of 14. These below the 14-year population are the people who are either going or seeking to go into K-12 education. So that's the potential of K-12 education in India. If I have to bring out a parallel in terms of the percentage to population, 32% of our population is more than the population of USA. So while we could safely say that the entire population of USA is less than the population that we can target to go to K-12 education in India. 11 million people in India currently are going towards higher education, and that's only 11% of the population in the 17 to 23 age group. The government wants to up this by year 2017 to 21%. It's an ambitious target. And even if we achieve it, we'll still fall short of world averages. Revenues. Private education market in India is worth $71 billion. And as we talk at this particular moment, in 3 years from now, it is estimated to reach $110 billion. The K-12 segment alone contributes more than $31 billion. The private market, the market for private colleges, engineering, medicine, business is valued at $7 billion. The tutoring business is $5 billion. This $5 billion does not take into consideration the neighborhood teacher who calls in 20 students and teaches those students as tuition classes at home. That's the breakup of the private education market in India, $71 billion. 47.5% is today K-12. Higher education and tuition coaching is 17.5 each. Books content contribute 8%, vocational 5.5%, and the others are 4%. Preschools contributes 1% out of that, and technology in schools a percentage. Let's understand a little bit about demand supply. 150 students compete for a seat at IIM, whereas you receive only 10 applications for every seat at MIT. 450,000 students fly overseas for higher education. $13 billion is the size of that industry. If the RTE is to be implemented in its right flavor, we require 1.2 million additional teachers. As per the 12th five-year plan, the outlay is to set up 6,000 additional schools, 2,500 in public-private partnership. That's the market, that's the demand, and as we move along, there are challenges that one needs to overcome to meet it. The first challenge is the financial one. The industry, now this is specifically to K-12 and higher education, is under the umbrella of not-for-profit. So large amount of private investment shies away from this particular sector. If one talks about setting up an institute in any part of the country, cost of land, cost of setting up of an infrastructure are two major components of CapEx. Long gestation period, 5 to 7 years of holding capacity is what one needs to plan for. Regulatory challenges. If one talks about setting up an institution today, one has to meet a regulation list, which is fairly long. Land, CLU, permissions to start an institution at the central level, state government NOCs, affiliation laws to be met, and a whole list of other rules and regulations that one needs to today follow to set up and run an institution. Entry barriers. If you organize the finance and are well equipped to manage the regulatory challenges, there is limited choice of entry. Section 25 companies, trusts and societies are the vehicles you can use to enter into this particular business. And if you're able to manage that too and set up an institution, another big barrier is lack of availability of trained manpower. Why it concerns? While we have understood the potential and the market, and with the scenario that we discussed of why the private investor is shying away from the entire segment, the challenge is we don't have the money. Even if we receive the money, we are not able to pay the returns as per market. And so, it has got us to think. Some models have evolved over a period of time. Some are still evolving, and some are the models of the future, but strongly recommended. The traditional model, delivery of formal education on a not-for-profit basis. Diversified corporates have been using this particular vehicle as a part of their corporate social responsibility mandate. This is the traditional route they have used via trusts and charitable institutes to set up large academic and research institutes. We have enough examples of this in the country. Premier, but still not in volume. Delivering services on a for-profit basis. Industries today invest in delivering services on a for-profit basis, connecting with formal education sector and to students directly. There is a lot of work that's been happening in this particular space. This is a sector, as per us, set to grow. We see a lot of activity happening here in terms of foreign participation. 100% FDI is allowed here. We feel that the government and the private sector needs to work on exploring these options better. A lot of work has been happening in the area of skill development, assisting the vocational education sector, and enhancing skills to meet industry requirements. And as more people use this particular route to connect to industry, our feel is that the pressure on formal education will reduce. Public-private partnership. In the public-private partnership segment, the government and the private sector in varied stakes have been working hand in hand. We have examples to learn from. There has been work that's happened in the vocational training space. with mixed results. Our feel is that this area is also set to grow. And the last frontier, and the important one from the private sector, is delivery of formal education on a for-profit basis. While there are merits and demerits of this, and that can be discussed, our thought and feel on this is that while there are commitments and vision statements we have made to increase and expand formal education, it can only happen with the participation of the private sector. And that will only accelerate and catch speed if we turn the sector into for-profit. Some alternate paths used by the private sector to work in the education space: preschools, private tutoring, multimedia content, educational software, skill enhancement, IT training are the spaces that corporates are today working in. Innovative structures to unlock profitability. Today, a private investor or a corporate getting into education has to work innovative structures. And some of the structures that have evolved are, or some of them are still evolving. One of the structures is here for us to see, wherein a trust or a society with a set of trustees is set up, which now connects, coordinates with the central and the state government for the NOCs, land permissions, land conversions, affiliations, permissions. But at the same time, it has back-to-back arrangements with private investors who invest in the services business, training, content, multimedia, brand. And by doing this, the advantage that the trust has is it gets the leverage of a lot of research, prepared, equipped, visible products. And the private sector gains by receiving a service fee. Many of these arm's length relationships sometimes have the same shareholders on either side of the table. The other place where the partnership has evolved is wherein the trust or the society works with land and infrastructure owners. And by doing this has reduced the capital expenditure requirement of the entire project, is able to pay out a lease rental back to the investor. Private participation, to my mind, is inevitable. Immense opportunities for participation of the private sector, both domestic and international, are evolving. It is possible to legitimize and provide for-profit services. This probably is the fastest growing business segment in the entire space. Both the government and the private sector together should work to seek and harness creativity, energy, and capability of the entrepreneur investing in the sector, working together rather than working against. How do we create a win-win? Our suggestions here is that to attract quality private partnership and quality private participation, it is essential to allow investors a reasonable, legitimate rate of return. I have two suggestions to make here. One, government should allow long-term lease of land and infra with a decent return. Now, decent return in my mind is where it is linked to market. Second, as it is done in other regulated sectors, example, electricity, the government can cap profitability but allow a rate of return to the investor. This model is a win-win for all. This is implementable, like in technical education at the state level. There are fee fixation committees, and you can maybe use that as an example to fix the rate of return. the government also stands to gain by this. Today, because the structure doesn't exist, a private investor invests via the trust, receives the return, and it's not shown on book because it's not legally allowed. As soon as you make the industry for profit, then profits will be taxed and a certain amount of return will come back to the government. Just a ballpark figure tells us that if the industry is made for profit, we should receive in excess of 2,000 crores just for the year 2012-2013 as tax. The direction here on, the education sector is the next big story of India. India has the potential of becoming a global hub, just like in IT, ITES, and the auto sector. K-12 schemes enriching enrollments have been rolled out by the government, the Sarva Shiksha Abhiyan, and the right to education, assisting reach quality education and expanding the base of reach to students. Our thought is the key issue is not whether, but how quickly we can capture this opportunity. Thank you.
You told about the model where you have this same set of backing or private players backing both the societies as well as the private company which is involved in providing the services, which is probably not possible because you are not supposed to have related party transactions in societies and trusts. It has to be in some way masked or hidden, or layers have to be introduced. So then again that creates a lot of issues in terms of long-term issues, in terms of I mean to say like power sharing and the association, how long does it work out? So as you create the number of layers, that the complexity keeps on increasing. So my question is on that, how do you manage that? And the second one is you talked about the for-profit being allowed in education sector. Incidentally, I attended another seminar which was organized by ASSOCHAM. It's organized every year. So we had Mr. Montek Singh Ahluwalia addressing, and he was citing the example whereby the industry was opened up in 1992. Licensing was removed. So he said at that time, the customers, the people, general public at large, and the businesses as well as the government all wanted the licensing issues to be removed.
Well, maybe the first question is more relevant to work that Seema does, but let me answer it from the angle of the business. Yes, having the same person on both the sides of the table is not legal, but there are structures that one can utilize to control both the aspects. That's how I would like to put it. I'm not saying that Mr. Melvin will be on the trust and Mr. Melvin will be on the company. Yeah, it can. Yeah, Mr. Melvin and Mrs. Melvin need not be, but two business associates could be. There are structures in which you are able to manage that today, and a lot of investment that happens in the sector happens from that particular route.
That does bring in a lot of conflicts.
Yes and no. Yes and no. Yes, because if you have not structured it well, then there is a challenge. But like I said, that if you look at the 90-odd thousand private schools that have come and evolved over a period of time, right? The structure also has evolved.
So we'll wait for Seema to share her view.
Absolutely right.
She comes from a legal counsel, but my thought is that is it on the right side of the law or a wrong side of the law? So it might be, my view, that it might be on the wrong side of the law.
The mandates that are required by the law and meets it from that aspect, and it can be created. That's the first part. The second part of the question that you talked about was in terms of somebody saying that, you know, can you just repeat the second part in terms of students getting impacted? If you today look at it, maybe from an education system that I went to, which has now evolved, and maybe because of the private sector, the same teacher is not there in the classroom because better opportunities have come and teachers have moved on. But the fact also remains that with salary levels increasing, with international affiliations and boards coming in, and private investors investing into the sector, today a child is able to go to a school which is modern. I was hearing another session where a very important good example was brought in. Maybe once upon a time when chalk and talk was applicable in school, it was the most relevant method at that point in time. Today what happens is that students outside are on Facebook, on WhatsApp, and teacher also is on WhatsApp and Facebook. But they put it all off and come back to the classroom and start using chalk and talk.
Sir, can I attempt? Can I just...
Yes, please.
So your question is very relevant, that Montek Singh Ahluwalia feels that privatization of education will impact parents because finally the fees will go up and impact the families. Yeah? That's what, okay, so just let me take you in 2 minutes time, the present situation in the education system. We have around 10 lakh government schools, which is increasing day by day. Considering schools which charge even 100 to 200 rupees also. Now look at a private school. I as a taxpayer feel very, very bad every time I pay tax. I pay 3% cess. I run a school. My child goes to another school. Look at the irony of a person like me. I pay 3% education cess. Then you do a right to education. So in right to education, finally what is happening, no school is paying from his pocket, 25% student comes in, I bear the brunt of paying for that extra 1%. Situation is not over. Unluckily I am a school owner. I pay 6th pay commission teacher salary. So as a private school owner, I am bearing the brunt, and as a taxpayer I am bearing the brunt. Government on the other side is paying 6th pay commission, doesn't have any accountability on the teachers that any productivity is coming. We work very closely with Sarv Shiksha Abhiyan guys. There's a campaign after campaign to anyhow drive admissions inside schools. But actually, I run an underprivileged school 60 kilometers outside Varanasi. Actually, my school children, we charge 50 rupees. They pay 50 rupees. They are registered in this private school. They actually go have midday meal in that government school, come back and again study here. Because in that school, which is government school, there is no teacher holding. Just somebody physically being there. Now, somewhere, I met Mr. Sibal sometime back when he was Minister of HRD. I asked him the same thing, that why are you penalizing somebody who is a taxpayer money? You're taking this money, wasting it so much. You make a populist theory of right to education. Who is it benefiting? And who is paying for it? Government is not paying. You remove cess. You say, okay, I'll not charge any cess. And then I'll make education free, right to education, 100%. Absolutely fine. What are you doing? In a way, you are, trying to attempt to earn from the same set of people multiple times. And I'm very much for the private school owner, because if he has to seriously do 25% RTE and 6th pay commission, believe me, he'll be paying money. And I'm talking about a school in Delhi which charges even 50,000 rupees fees per annum per child, will be paying from his pocket if he honestly does the same. Please, if the government agrees to say that, okay, I don't know how to manage this 1 lakh schools or 10 lakh schools. I don't know how to manage. I'm not able to give quality education. I am ready to, like we are saying, 5,000 schools to come for public-private partnership. I'm ready to give all 1 lakh schools for public-private partnership, which will bring accountability. The money which is getting spent every day, which will actually, if you see midday meal, so I was in Hyderabad, and there's this company called Nandi Foundation. They now in Maharashtra do 1 lakh children midday meal. So government has largely privatized in their NGO per se, but they're largely privatized, saying that we don't know how to do midday meal. They're every day getting thrashed because something is coming out of the meal. So let's give it to somebody who knows it better. I'm saying good education is a most ultimate objective. But any setup will not sustain, because finally education has to sustain on its own. Today, we work with multiple kinds of higher education or K-12 or even running my own school. If the money is not coming out of the system, if it is getting, drips outside, long term it will not survive. That's my only thing. And what is happening today is that whether we are paying tax or we are not paying tax, there's a lot of mismanagement happening at that level. Today parents, I talk to a first generation parent who just knows how to sign. Says, I'm ready to pay 100 rupees, 200 rupees, 300 rupees to send my child to a school where a teacher comes. So I agree to your point of view, but
private sector now are doing a good job. It doesn't quite work out that way. Two, following up on her point, in the state of Kerala, on an average, we are losing about 1,500 to 2,000 government schools. The simple reason that they are not coming up to the standards that they really want. It's weeding itself out. The teachers are struggling. There are some extremely good government schools which are doing well. Three, we are again presupposing that the private sector operator now is not doing it as a 5 to 7 years. We are even looking at K to 12 education or otherwise reasonably closely. That's my submission.
Okay. We'll take his point and then we'll come back to Seema's presentation. And then we can go down.
I have a question. See, we were talking about ultimately moving to the for-profit kind of a structure. In the current scenario, do you see that coming in anytime soon? I mean, in a year or two, or maybe another 5 years, 10 years?
I would believe that it should come in shortly, but and a lot of work is happening in terms of moving in the direction. If you see a lot of policies currently getting implemented, a lot of discussions happening. A few months back, Economic Times had the top industrialists talking about top 10 issues that needs to be addressed as a country for us to go to the next level of growth. One of them was education. So our thought is that there is discussion happening, and as the sector grows, it's only a matter of time that it will happen. If you ask me in terms of time frame, maybe I'm not qualified to answer that from a perspective of how much time it will happen. But if you see the direction that it took in the last 20 years, last 10 years, last 5 years, and last 2 years, I think now it's picked up speed. At least it's being discussed. 20 years back, it was a no-no. Now it's come to a table of a discussion. So that's how I would put it. Please.
Actually, Melvin has set the tone. He has totally tell you what is the extent of the whole demand we have, and also supply we had, plus some of the issues undercurrent we see it. Like if you we don't know how long private and etc. will go, but that's the reality of the light. There is a regulated format. And at the same time, what is the informal etc. we are saying that the parallel systems are also running. And then whatever we are seeing in the exhibition, we have seen that there are supporting systems and processes are also running to enrich the whole education gamut. As a private philanthropy and as a private investor, we see lots of opportunity in last two option. As much as I have read, the people would like to invest in different kind of innovations. Innovation doesn't mean that IT or high tech, etc. Innovation also means that in the given, what are the stats, Melvin has suggested India, everything is big. So we have in three-digit millions, everything 3-digit millions. If we are fortunate enough, it go more than 400 million, 500 million. That's the landscape we are talking. And if you see the existing, as lots of speakers in earlier said, we are meaningfully covering 2-3% with all those right now what we have in the higher education gamut. And if you really talk their employability, then it's again went to somewhere else. So if we see the whole gamut in that perspective, there is a huge opportunity for the private player to play in a meaningful way. If we don't believe in the traditional brick and mortar model where you have to invest in land, you have to invest in building, and then your payback period is gone, or either you have to then set up the different way of proprietorship arrangement, etc., etc. But in really what we see that charity would like to find, explore lots of innovation. And I can tell you what is our experience. We have done it, one midday meal program, Ujjawal has mentioned, we heavily support the Akshay Patra, where it has the largest kitchen in Hubli, which we have supported, experimented, happen. So there are lots of space outside which can complement. It's not replacing the word maybe different way, but it's complementing the whole process and playing it. Now it's one of the biggest kind of midday meal program. Similarly, different, and these are all non-profit format we have supported it. We have supported again one organization, Agastya, they design a low-cost science equipment to supplement all these. So there is a huge opportunity lying, either it's a philanthropy format or it is a investment format in that gamut. And the second type of investment we have done in where we have ventured ourselves also and supported some other people of redefining where, like if you see that our existing programs is very heavy content loading. And by delivering all those content, you make everything very expensive. And because of regulation, etc., you have to do. But if you really see the relevancy, how much relevant they are content-wise, it's just like some. We recently was piloting with one program in VLSI design, chip layout design. Usually, CEO of one of the companies, my friend also, and I'm involved partially in that company. We hire the engineers, then again 2 years we train them, and then they become a kind of eligible or kind of somehow ready to work on those high-end project. But right now we have experiment and we are kind of setting a whole 3-year program after, it's not a degree, etc., which from after +2, they directly go and learn the VLSI design. And really see that what is the opportunity. And if you see that whole the costing is totally different. You don't need the arrangement you need. You spend on affiliation, etc., approval. So how lots of innovation can come from the industry and the people who would like to long-term play the role in the private domain. And there is an opportunity because you have seen that so many numbers we have talked in populations, and in the graduation, like in 12th 5-year plan, they're saying we would like to have 25%. And we will, I don't know how much cess we will increase by reaching that. But there's a huge gamut is outside. Even if I'm saying 50% will be in only that eligible criteria, there are lots of populations are outside that domain. They are looking for the innovation. They are looking for the affordable product. They are looking for the relevant product. And I see personally that lots of investors are looking those kind of product. Because still regulation will take time to open up the regulated firm. It's all independent. And those who are meaningful investors, they don't want to do this side or that side of table propositions. They kind of support, and not on the VLSI, we have simply experimented in agriculture also. To my surprise, we have hired one of the agriculture graduate, and we're very surprised the person doesn't know how to take a soil testing. So you really see that not to expose what is happening presently, those are different, but you need a very, very specific agriculture sector require a very, very specific skills. If you, that can be delivered, not to take a 4-year of life. Like if you see that most of the 50% population, if they follow this kind of education, their opportunity cost is very high. So how we can design a different kind of innovative product which is relevant, which is industry want, which is can fall in domain of skill, semi-skill, or maybe complemented with the knowledge, with a different format. I'm sure, at least from our side as an investor, we are looking for umbrella of those kind of programs, not a 1-2. And we ourselves experimented in account, finance, agriculture, VLSI design, social entrepreneurship. So there is lots of opportunity by the magnitude of the India we have and the population we are kind of, every presentation like we are saying we will have a demographic dividend, etc., etc. But unless this human is not converted into human capital, these dividends are, I don't know, it's more in liability side. And we will see all those. So as a private philanthropy, as a investor, we are more looking for those ideas. This is kind of not very content load, which makes sense, is totally justified. Someone why they should pay that much, not because of they have digital labs or all sort of stuff which is kind of culture driven, not the utility driven. And so we are bringing those kind of thought process in our investment. We have a 30 plus investment in different non-profit and for-profit in education domain. Similarly, we are same thing. We are. It's very interesting. It's not only relevant in India, it's relevant in US also, because the strata they are dealing there. They are also, if you go in a class has everything, books, electronic device, etc., and the teacher is highly trained in more meaningful learning, but the student interest level is totally different. Their priority, their way of dealing is. So how we can come up with the various different kind of solutions, and of course the whole regulatory things need to be further mature. We are still talking in a private domain, and their affiliation. All parents have a different kind of a view on the education. They would like to more go through the degree and master and all those kind of program. But at the same time, I think that if it is a watershed time for education, because the hell lot of discussion is going on the skill side, skill not on the vocational perspective, but also skill in the existing education system also, vocational framework, etc., has been discussed and implemented. So lots of utility-based functions are coming, and I'm sure through proper way, there is an investment in private players, investor or impact investor from private philanthropy. They are looking for those kind of opportunity to find their meaningful engagement. Private philanthropy, they are not interested to, as much as I know in the circle, they are not interested to invest in subsidizing the something. They would like to have their money go in experimenting, in finding out the solutions, and which make affordable sense to our large population, because India, we are talking different. If we are talking these kind of solution, only will cater 4 or 5% of population. And then again, we will be quoting these kind of stats all over. So we are interested, and thus we have to find lots of different solution in different formats to experiment with. Thank you.
Thanks, Naveen. So you were asking something about.
Yeah, I was asking. There are a lot of coaching industry has been very well known, and it has come to be noticeably profit. A lot of taxes, etc., are also being done. So, can you tell me any investment going on about coaching industry, something like that?
Pro-private. He says, no. I said, no, you are. I said, why? I said, approximately 2 lakh children appear for an IIT exam. Approximately. If you charge 10,000 rupees, give them a 2-month training before that, you'll make 200 million, you'll be independent of government aids. But you don't do that. You say, no, let others teach them, let others train them. Even though you have a free faculty available, you can take 2 months. If IIT doing a training for IIT exam will be like fantastic thing. But they don't want to do that. So I thought, it's like they are very pro that let everybody generate money. I'm told in Kota, one small classrooms generate 350 crores of revenue.
I'll tell you, IIT will not be able to do that. It is not so easy. It will take time.
So all the IIT professors who leave IIT and then they come outside and they're able to do it.
Not necessarily they will succeed. There are a lot of things, the student goes, the teacher. So, in respect of investment, I just wanted to know what is that thing going on or not.
I can give some numbers. Again, numbers changes and the sources changes. So from the one source, last year around $200 million has been spent on this parallel, and almost 70% in that category. What you're saying, 30% is in outsourced, technology driven, this ICT, etc., whatever the exhibition you have seen it, 30% that side, and 70% money has been invested in. Plus, this is the people who do the filing, etc. The loss of investment quota kind of scenario, which is kind of doesn't come on any record, but the maximum low-hanging fruit for investor is testing, tuitions, language trainings, and of course mixed with the skill, etc., etc.
Why I raise this question is, you see, when you have formal education, you have a lot of restrictions, including legal fees and land, this thing, that thing, affiliation and all. Those legal hurdles are not there in informal education. So there are certain entrepreneurs, they prefer to go for informal education just because they don't want to get into these sort of problems and they become non-profit. Remember, the formal education has to be non-profit as of today in India. So some people may not like to go for that because unofficial transactions, etc. you can avoid. Unofficial profits, there are unofficial profits also. So you don't, they don't want to go in for that. And then they want to do it legally. They want to run a business of education legally, right? So that is how
These are the excellent opportunity, and most of people are investing in
you are right.
Yeah, you are absolutely right. There's a very low-hanging fruit for investors.
It is, and further the cloud they have is enormous. The total number of students in India who have sat for 12th exam is 82 lakhs. The number of students who attempted IIT JEE last year is 4.8 lakhs. And they were able to hold the government to ransom by having a second test. And the vast majority of teachers in these IIT classes are ex-IITians. So there is a huge parallel market running. It's something close to 8,000 crores in quota. I personally know of a very high-ranking CBSE official who was offered up to 10 crores. I hope this is not being recorded. Up to 10 crores for getting the attendance sorted out for these parallel schools. So it's a huge market. And as such, there is one question which I wanted to ask Melwin. Is it desirable to have for-profit in the system? That's a much more principled question. We won't go into it. I, for one, have very ambivalent views on it, having seen the darker side of it from both sides. The kind of influence these quota guys have had on this system is enormous, the informal one. And even now, just 1,50,000 coming into the next exam. Now they are at the peak of their earning powers in terms of getting the students sit for these exams. And finally, the quota story. Every week, I am personally aware of 5 suicide attempts in quota. Are we looking at the other aspects which the lady talked about holistically? I personally know of at least 5 attempts every week in quota where children attempt suicide. 66% of all students who were into IIT to last year.
Not-for-profit thing, if you just allow me for a minute. Over a period of time, the mindset of a trust, which is generally not efficient, needs to get into sustainability. And a profit angle brings that sustainability. But as Naveen would say, if you bring about the social impact as an additional dimension, as the third angle to look at apart from the profits at the bottom line, then it comes to be social entrepreneurship or something like that, which is, to my mind, is a way forward where there is profit also, and at the same time the mindset of the people running the education changes.
One quick question, not about right or wrong. The formal school trust having their own tuition market and actually conducting this parallel?
It is illegal. Because you are providing education, extra fees, but you pay fees for the one time, which makes you eligible from 7 o'clock in the morning to 10 o'clock in the night. One time fee. And you can do that, but you'll be called as an extra class.
And what's happening in Delhi is that when a child comes to class 11 and takes up science and maths, the school says, okay, you can go to tuition class X, and we'll give you attendance here.
Yes.
So the attendance matter is also sorted out. So I'm sure behind the scenes there is some nexus between the school and the tuition class, which we cannot see. That is being done.
Oh, there is one.
But that's
There is.
okay as long as it's a win-win for all.
So that's why it's I think Keynesian view, I think it's very important to make education for profit.
Yeah.
At least there will
So,
not
I
be
request,
some
I request, we are little positive time. We are prudent on this. If we are left with after Seema's presentation, we'll definitely like to go back to this. But I think Seema has a presentation and very interesting. I've heard her once or twice before. Very interesting presentation. A lot of clarity about law will come out of that. So over to Seema.
I had some very interesting discussion. Well, a lot of speculations about for-profit, not-for-profit, legality, non-legality. Some views were completely off the mark. Some were just there, but most of them were speculations. So let's understand what exactly is the legal scenario and how it really works. Well, I've seen the kind of comments that I've heard the comments that we are making today. So I'm going to alter a bit of my presentation. The presentation was more on financing and how to get more financing in the education enterprise. But on the way, I'll deal with these issues. But on the way, I'll deal more with the regulatory aspects of for-profit, not-for-profit, and the legality part of it. And I'll also cover the related party transactions, which I think couple of times the issues were raised. So let's first understand, and I think we've already gone through this, the legal dimensions of the legal sector, education sector. What are the legal background? What is the backdrop for doing education in India? So as far as we are concerned, when it comes to informal sector, whether it is preschool or pedagogy development or teacher training, content development or tutorial or coaching classes, most of the regulations do not apply. But large, as Melvin had said, large part of the education sector is for formal education, which is K-12 and higher education, and that's where the large part of the money in terms of generation of revenue is there. So we'll focus more on non-formal sector, and then probably if there are any questions from non-formal, then I'll be happy to deal with it. So the background from the formal sector, which is K-12 and education, higher education, is that there are certain set models that we can adopt. One would be the trust, a society in a Section 25 company. Now there are new models like Section 25, which is being approved in certain states. Not every state adopts Section 25 as of now. K-12, there are states like Maharashtra, which has now come up with a new legislation, which now has approved, was wanting to approve Section 25. I had seen the legislation while it was in the drafting stage. Just before it was passed, Section 25 was dropped. So there is a mix of states where Section 25 is allowed and not allowed. So largely trust and societies are the formats which are used right now for providing setting up educational institutions. Now, the threadbare understanding of Section 25, or it's a trust or societies, they cannot be a proprietary entity. So there was some discussion of Mr. and Mrs. Melvin being there on the same. So what happens is you have to give in a certification and an affidavit that this is not for-profit entity A, and it doesn't have the nature of being family-related trust. That's the theoretical part of it. The real part of it, all trust in India, whether it is a Section 25 company or a society or a trust, they're all family-held trusts. Now, this way or that way, there are Mr. and Mrs. Melvins there. So, there could be situations where you may have some distant relative with a different surname, but the bottom line is these are for-profit, not-for-profit entities in the garb of for-profit entities, and they are vesting control in a particular family. But the rule of the law is that you cannot have family-oriented trust and societies running Section 20, running educational institutions, and you cannot be earning profits. Now, that's a very interesting backdrop. Why would an institution or a family invest money in an organization where they cannot legally draw out profits? So what kind kind of sector is this? Because the government views education as service industry, which is philanthropy and which is for purposes of contributing or a service to society. I don't think any of us who are in the education sector sees it that way. It's definitely a revenue generating for-profit existence for all of us, whoever is putting his own seed capital there. But this is a background where no dividends can be declared by these not-for-profit entities. Now, if this is a legal scenario where proprietorship is not allowed, dividends are not allowed, any kind of distribution of profits is a taboo, then how do we operate and make money and provide services and have quality control maintained? That's the area that I'm going to be discussing a bit more than the financing part of it. So first, let's understand if this is the scenario in which you have to seek external funding. Why would a PE fund or a VC fund invest in a sector which does not give them dividends, does not give them PE multiples, as we VC fund are aware? So what is the allure of this sector, which is completely not for profit, and how is the structuring done, which earlier speakers have slightly touched upon? So, and there was some discussion on the legality of the structuring. So let's understand a bit more on that. So first of all, there is no illegality in doing any kind of structuring as long as it is meeting the spirit of the law and the letter of the law. Let's sort of unveil what exactly this means. So the PE funds and VC funds or any kind of an investment fund, can it invest in a Section 25 company or a trust or a society? The answer to a trust and society purely is no. They cannot be holding any kind of shareholding, because this trust or society does not have any shareholding pattern. And the trustees and the member are anyway holding their responsibility in the fiduciary duty of being trustees and members for the well-being and development of that institution. They're not there to reap dividends. So technically, PE fund or an investor per se is not interested in being on the board of a trust or a society, because there is no revenue into it. But technically, the all revenue is there, and how do they manage it? So first of all, the structure of two-tier structure is adopted, where services entities are created. Investments are brought into the services entity. These services entity, and I'll go into the legality part of it also, these services entities are the entities which are having equity shareholding. They are for-profit entities. These services entities are basically going to be creating the value system in terms of pedagogy, content, management, operation, and all kind of auxiliary services for the institution, which is trust. The core activities of the trust cannot be outsourced. So let's just understand now the legal aspect of it. Can trust have commonality of trustees and directors in these related party entities? The answer is absolutely yes. There is no illegality about it. The only illegality derives from two aspects. The first aspect is a tax aspect. Are you trying, now Section 25 company or a trust or a society, these are typically exempted entity, tax exempt structures. Now, the first thing which a tax authority sees is, are you trying to derive profits through a means of having a parallel related party management services company and a trust, and then outsourcing all your core educational activities to this related party entity, and then creating a dividend model for them. So that's the veil that they lift. Is this money paid actually for services rendered, or are these services being just camouflaged for the purposes of payment of money, whether any services are given or not? So that's the first parameter they look at. And there's a recent judgment, which is a Maruti case judgment, which happened in 2012 by a division bench in Delhi High Court. It went very deep into every aspect of a related party transaction. And the bottom line of that judgment was that there is nothing illegal in having a related party company providing services to its own trust or society. At the same time, rationality of services fee paid has to be maintained. Is the service fee comparable to the services rendered? Are they commensurate to the to the value delivered. So for example, if any other unrelated entity would charge X, are you charging X plus? That X plus is something which is a dividend distribution mechanism for you. Other than that, if you are creating value for the trust, that is a legal structure. Second aspect is from an education point of view. This is a tax aspect. Second aspect is now whether it is CBSE or state laws or any kind of affiliation laws. The fundamental bottom line of every law is that the core management of the school or a higher institution has to be vested within the four corners of the trust. Is this core fundamental aspect of the organization being outsourced? If that is the case, if your management and operation, that's why I always advise my clients, do not go drift towards management operation services agreement, just give licensing and services arrangements. If the thrust of the arrangement is outsourcing of the very existence and running of the school to a third-party entity, you are bordering towards non-compliance with law, because the purpose of the education laws is that every core activity has to be managed by a management committee of the institution. And if you're outsourcing everything out to a third-party entity, then you are violating the very, not only letter, but also the spirit of law. So that is as long as these two fundamentals are maintained, you can have similar directors, similar trustees, you can have as much as of closeness in terms of related party transactions you can have, provided the commensurate part of the service fee and the fundamentals of the services received are maintained. So this is a very, very important aspect. After 1, 2, 3 years of operation, I think the line, the division between the trust and the services company starts to dim, and that's where the problem starts, because suddenly you realize that the management services companies are the ones running the trust and the schools, and that's where the problem arises. So therefore, one needs to be a little more focused when we are providing services, where are we going in terms of delivery. The other model is having real estate companies being funded by private equity funds and VC funds, so that the asset light model is adopted. Asset light model basically keeps the capital requirement of the trust very thin and low, and it is the real estate companies which are actually funding the infrastructure development projects, and private equity funds can legally invest into these entities. How do the private equity funds have control over the trust where the revenue generation activity is? They have their nominees on the board of trustee, they have their affirmative voting rights, they have long-term lifetime memberships given to these nominee trustees, and they also have succession rights. Now, is the foreign direct investment allowed in Section 25 companies or a trust or a society? The answer is vis-a-vis the trust and societies, the FDI is barred. You cannot have foreign investors coming, whether it's a service providing company or any other company coming into and investing to a Section 25, into a trust or society. Section 25 companies can receive foreign investments for education, but they will not be allowed to distribute dividends. But the investment companies, when it comes to services company, which are services and operating companies with providing services, infrastructure companies, they can all have FDI from abroad. Is early stage investment a good option? Now, this is a bit of a digression from the financing model. We all talk about, getting VC funding or a PE funding or a third-party investor into our early stage enterprises. And I have met so many entrepreneurs who keep asking the same question, that is it a good idea to get VC funding in the start of the project? It's better to have debt funding initially rather than having a third-party investment into the company. Well, if you're looking at setting up a company, setting up your own school or a higher education institution, and you're looking at getting third-party investment through VC funding through related party companies, There are certain nuances, there are certain setbacks you will have to accept to receive the funding. The first is that there is hardly any enterprise valuation to such an entity. So if you are intending to set up your own institution in the beginning and you're seeking a large part of the funding from an outsider, you have to pay the price for it. Because there is no enterprise valuation to your institution. Your business plan is an idea. And people don't invest in idea unless they take a big, pound of it. So part of the entire kitty. So what happens is, since your enterprise valuation is so low, the idea is still not implemented, or it is still pre-profit, pre-revenue stage. You end up giving a large part of the stake to the VC fund. In addition, you end up also giving substantial rights than what you would have given if you were 3 years or 4 years or 5 years of company, because your bargaining power is rather low, because you want to set up the institution and you don't have the fund. Whether it could be a formal education or non-formal activity, in both situations, if you are receiving funding into a sector which is still at the idea stage, you will end up giving much more than what you would have given if the enterprise is 2 years or 3 years into the in the financial terms. Then you also, if the entrepreneur gets the equity in the first stage, the checks and balance, the control also increases. The entrepreneur is there who is more focused on developing the business, but once you have a VC fund or a third-party investor, he needs his Excel sheets, he needs his monthly reviews. So your focus is more in compliance rather than growing the fund, which you need the expansion. For the expansion, you need the capital, but then it also holds you back in terms of flexibility. So what is a good option if you are the initial startup? If you're an initial startup, the option, probably debt financing is a better option. If you are looking at growth stage, expansion stage model, and that point of time, I think VC fund or a PE fund is a good option. If that is not something that you're looking at, debt financing is scary and VC funding is hard to find. There's still very few VC funds and angel investors who are willing to just fund an idea rather than a pre-profit company. There are other models available in the market. Some of the models are providing management services model. Now this basically is where you do not set up your own school. You actually help other institutions set up their schools, and you have a revenue model where you are providing pedagogy, content, process, system development, recruitment for teachers, because you have the money and the land, but you don't have the idea how to run the school. So management services could be one area where you could be providing, and this is a capital light model where you do not need a large part of funding, and you can have consultancy arrangements. And this is prevalent across the board in India, and I think more corporates were initially going into, a lot of clients that I was representing were initially going into their brick and mortar model. But as I see over the last 6 years, even the bigger corporates are going towards asset light management services arrangement rather than setting up their own schools. The other option which is available in the market is brand licensing, which is if you have a good brand which is from the past, the family brand or other institution that you've run, and you are simply not giving any management services, but you're licensing your brand and you're providing the other institution to run the schools under your brand, which is also a revenue generating model. Franchising model is more for informal sector. It doesn't work very well in the formal sector, because for that you have to have a good brand, you have to have successful institutions that you've run in the past to do the franchising. For example, Vasant Valley, Don Bosco, or for that matter, Shri Ram. Now they have joined up hands with Educom Solution, and they are trying to do a franchising model. But these are brands which are established. What if you are in an informal sector and you are doing vocational training, you are into coaching or tutorials or content development, or most important, preschools? The franchising model is something which is low cap, doesn't require much funding, and once your basic initial model is ready, which is not requiring a lot of seed capital, once it is successfully run at 1 or 2 centers, then you can escalate and you move this up towards a chain across India through a franchising model, which is where large companies like EuroKids, or whether it is KidsZ, several other preschool brands have grown from 5 or 6 self-owned centers to 700 plus preschools across India. The other collaboration model which is available in the country is related to joining hands with the real estate developers. Again, I think I dwelt upon that briefly before, which is you tie up with the real estate developers who actually fund the school, and you are the trust running the school. You probably would be required to bring in some OPEX for running the teacher's salary and other operational expenses, but the large part of the capital is coming through the real estate developer. Now, I would be happy to take all kind of questions related to related parties or legality part of it. I am not going into it because I know there are a lot of people who may have some questions related to that.
Should it be set up as a Section 25 or one of the other options?
See, if you're only providing teacher training to the schools, this is a for-profit model. You do not have to be a Section 25 or a society or a trust. Your role is probably giving training to the school teachers, bringing them up to a new technological level.
For new teachers as well?
Yeah, so for new teachers as well. So this is a purely for-profit activity which do not require to be not for-profit.
But Seema, Ujjawal,
yeah.
The point is that if you are doing a teacher's training as a service provider for a school, then you can run a private limited company and provide that service. But imagine you want to do a B.Ed, you have to take license from government to do B.Ed, and that will be a non-profit. Yeah, you had a question.
Yeah, if it's a degree course, I don't think she was asking a degree course. If it's a degree course as a B.Ed, then obviously it's a higher education, requires all kind of regulatory compliances. Yes.
Two questions. If the society has multiple schools, is it true that you cannot take a loss of one school and pass it on to this one, or you can consolidate at the top level?
Okay, so revenue generating entity. For example, there was a very interesting judgment which came in 2010 from the Supreme Court, which has sort of validated this entire structure, which basically meant that previously what was happening is one management, which is one trust, were having multiple schools, and they were passing the excess revenue of one school to the other school, which was loss making. And it was challenged in the court that this is diversion of profit from one school to the other. And it was against law. So this was challenged before the High Court and then Supreme Court. The Supreme Court judgment finally is really rest to this issue, which says as long as the schools are run by a same management, so it can't be two different trusts trying to now share revenues. If there are 5 schools run by the same trust, same management, then the revenue of one school can be diverted towards the other school for making it meet its losses and operational expenses. So that's okay now, which was not okay 2 years back.
So when you say same management, does it mean the same society or the trust?
Yes, it means the same society and the same trust. No, it has to be the same entity, the legal entity.
That can also be, say, the same society runs a school, a college, medical college, etc. So they can do it in between that also.
No, it is between school to school. So if you are having 5 entities, one of them is a college and 3 of them are schools and 2 of them are colleges. So it is between these 3 schools that you can interchange in terms of, but the balance sheets are going to be separate.
No.
Not between the college and school.
No, if you have a structure of, so I'm just referring, I met KPMG guys, we were talking to them. If you have a structure in a trust called mother trust and a baby trust, if you have a structure that mother trust is a college and baby trust has 5 schools, then you can aggregate.
Sorry.
So if your mother trust is a college, so I'm referring to a live case which is happening now, that mother trust is a college, higher education college, engineering college, and the baby trust has 3 schools.
You mean the subsidiary of the trust?
Trust.
I doubt if that's correct. That's absolutely not above board. So you have one trust which has set up another trust, and that trust is probably a replica of the first trust. I'm not sure that's correct. Transferring the funds of the baby trust from the schools to the mother trust, I'm not sure that's correct. Absolutely not above board. See, it's a subsidiary parent relationship that you're talking about. So if
they're not legal.
No, they're legal. They're really legal. Now, They are legal, and you can set it up.
No, how do you set it up?
Depends on. There one basic thing which Seema shared. I think one basic thing is that the service provided between the mother trust and baby trust should be equivalent to the market rate. If that is so, you can do any kind of a transaction between the trusts.
Yeah, service arrangement, there's no issue. But just to explain what this means is, it basically, when it comes to a for-profit entity, so a parent company can invest into the equity capital of the subsidiary company and then sort of call this as a subsidiary. What happens in a trust in a society? It doesn't work there. You can't have. So you have group associate trusts. So if there are two trustees in the first trust, either these two trustees replicate themselves on the board of the second trust with their associated trust, or the first trust, which is, let's say, Bharatiya Vidya Trust, it becomes the settler and the trustee for the second trust. So in that sense, the second trust is coming out of the first trust. Well, that's what it in legal terms means.
If we have the same trust, it's not a baby trust, but the same trust running the college and the school. You mean to say even then it is not allowed?
As of now, only school to school is allowed. School to another college is not. In fact, the question was, the Delhi government was not even accepting school to school transfer. In fact, both my sons are studying in St. Columbus. So the Columbus itself received a notice from CBSE that why their registration and affiliation should not be cancelled. And even the state government issued them a notice because they have like 7-8 different Columban offsprings across the country and abroad. So they were transferring the Delhi Columbus revenues to Siliguri Columbus. So the question came that why we should not revoke your affiliation. So that was one of the reasons they went to the court. And the judgment came that this is okay as long as the mother trust is same and the schools are there. So only the schools are allowed as of now.
You talked about VC funding and the private equity. How does it fit into the scenario when we have a lot of cases coming out regarding fixing of the fees in the schools? And the government fixes the fees, or parents go and get a stay order on the fixation or increase on the fees?
See, first of all, the interesting part is how has government understood fee fixation and how schools have interpreted that. Government's point of view is that the fee fixation has to commensurate with the facilities provided. There is no mapping. So most of the schools and most of the government entities, they believe that there is some particular fee number that we can charge. It's not correct. You have a public school which may be charging 5,000 annum, and there could be a public school charging 5 lakh an annum. So how is that possible in the same regime? That is possible because government hasn't fixed a particular fee. They are saying your fee has to commensurate with the facilities provided. So if you're providing horse riding, swimming, extracurricular activities which are seeking additional funding and the parents are willing to pay, then it is commensurate with the fees being charged. That's why you have ultra modern, expensive international schools which are also under the ambit of law and completely above board. So that was one. Then there was a 6-pay commission regulation which came in, where now because of that situation, the government allowed 500 rupees to be the fee for being charged for every child. Now what happens is that as per Delhi laws and most of the other states, you have to submit your fee schedule at the beginning of the calendar of the academic year, and it is not an approval process that the government actually sits down and look at your fee schedule. They actually see, okay, if it is commensurating with what you're charging, then that's like signed upon. It's like an intimation process, but the bottom line is you cannot increase that fee during the course of the academic year. So when that fees was increased, the 6-pay commission was implemented, the government in the middle of the academic session, somewhere in September, they allowed 500 rupees excess being charged during the academic session. And that's where lots of parents, lot of schools as they increased much more than what was being implemented, and that's why they went to the court. it's not only in Orissa, there are several cases being filed across India against the fee fixation. In fact, I don't know if you've followed this, in Andhra Pradesh, a new judgment has come which says that why only 25% is being reserved for RTE children. The entire 100% should be free. Let the school work with the committee has been established. Let the school institution work with the state government. Figure out how up to class 8 the entire education be made free. This is a proposal of a high court of the state. So how is an institution supposed to work if up to 8th class they're not supposed to charge any fee? And they said, oh, go back to the government, seek some fees from the government, which we all know what it would be, and have a business model only based on the 9th to 12th. So this is a judgment coming out, and this is one instance. There are several other cases lying across the country about fee fixation. The Delhi High Court judgment is very clear, in the modern school judgment is very clear, which says as long as the fee is reasonable and commensurate with the facility, the state government cannot interfere, and the court should not interfere. It's a Supreme Court judgment of modern school. High Court are now trying to interpret law in their own way and say how that judgment is different from the facts of this particular case and how it doesn't apply. So there is a bit of tussle between the government and the socialist judiciary. It's an evolving state right now.
Great.
How do you define that? What is commensurate with what you are?
Well, that's your convincing power to the state state government officials.
We'll discuss this offline, Seema. We are running out of time.
Sure.
Thank you so much. Yeah. Request you if you can come back. We'd like to summarize the session. I think from the participant point of view, there was something to carry back. I saw you writing notes. I don't know whether it was related to this or something else you were writing. But good set of questions. Thanks so much, even though we are a less number, but we had an interactive session. Hope all of you got something out of this session. And maybe once we are out of the table, we can network. If you think anybody can answer a question, or if you have a question specific to somebody, you can catch up with him separately. Thank you so much, speakers. Pragya, are you there? Yes. Thank you.
Would you like to summarize the session?
So I, in a way, tried to summarize the session, but if you want me to say, I think one or two things which is extraordinary. Towards the end, as Seema clarified that related parties can be together, it was actually an information for me too. And I think I know a little bit in this area, but still I clarified. And I was clarifying here, and she said, I'll go and clarify there. I think related parties is a very important information because that creates a lot of opportunities for people to be part of trusts. Melvin shared the whole structure and how private companies can create a little bit of earning potential in this whole non-profit sector. And Naveen shared what is the most important part is to look at the social aspect and still go ahead and try to be a venture capitalist when you are small enough. From my side, only 2 points, because I think most of the companies think that investment happen on top line. The new set of investment which is happening in the country, particularly in education, is happening on PAT, profit after tax. Even if you have 1 rupee PAT, there are investors who are ready to give you 20 times of that. But if you have a top line of 50 crores and you are not profitable, means the execution is a big challenge inside the company. And we as Indians are far better, ideist, strategist, but per se the executionist. So I think if you're running a company, if you're running a business unit, whatever growth, if you have 1 rupee profit, it's more valuable than 100 rupees of top line. Thank you very much.
Token of thanks on behalf of the organizer and World Education Summit.
Seema to present it